Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the 5 trading days, the Australian dollar has broken the trend but rejected what was once support, now resistance. However, we still need confirmation, and that would be the close under 71.40. We did get a low again at around that 71.30 level. As you can see, we've had a couple of spikes there, but no confirmation to the break of the downside, which I believe will come in around 70.5 and down towards 69 cents. However, it is a test from the technicals that the MACD is negative and the RSI is a little bit mixed as it flirts around this level, around the midway point. Nevertheless, a close in New York tomorrow morning at 7 a.m. under 71.40 will give us confirmation to the downside and see the immediate target around 70.80 and eventually lower with a potential broader picture of 69 cents. As you can see, that the fact that the euro has taken a few stabs at this level and it's seen around 118.25 to about 119, a supply zone. I still feel that overall, with the pattern still negative, that upside attempts towards this region will come into a very heavy supply region, or more to the fact, a bear camp. No doubt see the market reversal. I do anticipate that the dollar index, which measures the greenback strength against a basket of 6 major currencies, will eventually recover, and it is showing technical implications that it has bullish characters that should eventually see the euro look back to the downside. Now we do need to see a break of 116.85 to reaffirm the downside target around 114.5. Dollar yen, well, as you know, I'm pretty much neutral at this or around this level. The target was at 107 figure, and now if we just bring this down a little bit, we reached there 3 times. I'm a little bit on the cautious side in coming out of any calls beyond this level, as I feel now that we've reached it. I'm just waiting confirmation from the technical assessment to support a bear case, because I think that's the next step in this pattern. Still, the market is showing a little bit of a slight uptrend here, as you can see. So don't discount further tests towards this top side level, which can come in anywhere from 107 figure to 45. But if you're trading from the long side, don't forget to adjust your stop losses and take profit accordingly to your risk management, just in case that we do see a rejection and a sharp one. As you can see previously, the market did tumble quite heavily. To my surprise, maybe to some of you sterling traders, that the TriStar Doji, which represents a bearish pattern, has not quite come through yet because it needs the confirmation of 130.30. We've had a few attempts down at this level over the past 10 days, I think, 2, 4, 6, 8, 10 days, yes. And you can see a couple of stabs here and a few stabs here, all underneath 130.30, but no close from a New York base. Until we get that, I can't come out with a bear call down towards that 127 level. And this also has not been fully confirmed. So wait and see where New York closes tomorrow morning. If it is under 130.30, then I'm looking down at 129, 128, and around about 127.5. The MACD is negative as the RSI flirts with the midway point. I'm looking at the weekly here, and the weekly does suggest further indication to the downside. But with that being said, I still hold a neutral view because we can easily see a rejection from this bottom side of the range as we are a little bit oversold. But for the weekly point, we are extremely oversold and the trend is overheating. So let's see where it closes in New York and see if we get some kind of assessment whether the bears are still going to continue push the dollar Canada lower, or will we see a reversal? Now, since the pattern, I've been looking at gold, as you well aware. It was the bearish outside range day that followed with a doji greystone, and then followed with that a very heavy 120-point candle, rebounding off 1,860. I'm now neutral, but I did notice one thing, that if we see a close above this level of 1,968, could give us some bullish implications. But until then, I still feel there is a bit more downside test to come. I don't have a very strong view on this. It's just really in terms of how these technicals are still laying, and they still show somewhat a negative pattern. So do be on your guard. But for now, I want to be neutral because I feel that there's not enough technical evidence to support a trading view as of yet. Finish it off with oil, but as you can see, the market's had many stabs at this topside and no follow on. I feel there is a slight pullback coming into the market, but still overall looking to $46. We could be seeing to the bottom side of this range around 41, with a base now seen around $39.90 to about $40 a barrel. The dips have been very, very shallow, very short and brief, so no doubt this pattern will continue. And then still be on your guard is I don't want to sell this market. I want to buy it in dips. In terms of the fact is that demand will come back on any pullback, as the technicals are still in favour of a bullish move going from the RSI. Not quite yet with the MACD, but nevertheless, I still feel that there is a potential to go towards 43, 44 to 46. But watch for the pullbacks, as it could give opportunity. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. Enjoy the great start today and to this wonderful weekend.